General elections and money. This year is a unique year for democracy. It's a year when 1.5 billion people will place votes in various elections, many of them super significant for the direction of their countries. This week, the UK's Prime Minister Rishi Sunak confirmed that the UK will be going to the polls in July as well. It was widely expected that this would happen in 2024, with the only other choice being January 25. Anyway, we're going to the polls in a few weeks, and this video will explain what that means for your finances. Let's go. There's 5 points to cover in this video. Number 1, this is good news for savers. It was expected that there will be cuts to the Bank of England base rate very soon, as inflation has come down. But it's unlikely that the Bank of England will make rate changes around the time of an election. And given it's summertime, there's now an expectation that there will be no further rate changes until at least September. This is good news for savers, as it probably means higher savings interest rates for a little bit longer. Number 2, mortgages. Unfortunately, the opposite is probably true for mortgages. Borrowers expecting a rate cut soon will have to hang on that little bit longer before any changes are made to the Bank of England base rate, which ultimately determines what your mortgage interest rate is likely to be. Many pundits are saying that no matter who comes to power after the next election, there are going to be some difficult decisions to be made on tax. I mentioned on a video a few years ago that in the medium term, I only see the direction of taxes going in one direction, up. For this reason, I favour ISAs massively, and the importance of putting as much into them as you can cannot be overestimated. A side note, a stock and shares ISA is where I put the majority of my investment money. Number 4, pensions. There could be a bit of a yo-yo on pensions around the lifetime allowances. It's a yo-yo that I expect to yo-yo continuously over the next 20 years or so I don't expect this just to be a one-time thing. The incumbent government made a change to lifetime allowances a short time ago, and it's likely that a new government might be tempted to change that position. In any case, I don't expect this to be the last change to lifetime allowances over the next 20 years. It's an easy thing for governments to change at any time, so they are likely to see it as low-hanging fruit. I've done a video on pensions versus ISAs, so you can have a look later if you want. It will be shown somewhere around here. And number 5, for investors, politics and elections is just one thing that could affect the way stock markets behave. Uncertainty is what leads to volatility. But over the decades, there has been plenty of change in politics, politicians and their policies, and stock market returns have continued along their merry path, showing that long-term investing is what the focus should always be on. Unless of course you're an active trader, which most of us are not. Short-term noise and volatility leads to greed and fear, and both of those, when they peak, lead to poor decision making. Another video I've done on 3 steps to financial stability will be shown here somewhere if you want to take a look later. And if you like videos like this on money and personal finance, then make sure you subscribe for more. See you on the next one.